Hello Deep Value community, thank you for joining me. In today's video, I'm going to talk about 5 books that helped me become a better investor. I hope that they will help you along your value investing journey. So if you're new to the channel, please subscribe now so you can get my next video installment. So the first one I want to talk about, it's not really a book per se, it's more of an article, and it's Warren Buffett's 1984 Super Investors of Graham and Doddsville. So this article is about 12 pages. I think there's an updated one by some university that added another 2 pages, kind of calls the new updated version or something like that. So you can just Google this, it's quite easy. And I'm going to put the links down below to all these books. So this was a book that this was an article that I was reading pretty much once a month. It's not complicated, it's very straightforward. Everything that Warren Buffett says, it's very straightforward. But if you understand the principle of the marginal safety for these 12 pages, there is absolutely no way that you are not going to become very wealthy over time. It's very straightforward. So he talks about himself and some of his colleagues like Charlie Munger and Walter Schloss and how they've performed over time. It shows their track records and it just offers a little narrative. But the key takeaway that I felt there, that all these investors had some bits of overlap in terms of their investing track record, but they're pretty much not invested in the same stocks. That's just amazing, isn't it? So it's just a demonstration over a long period of time how value investing works. The next one that I believe is quite helpful is none other than Mohnish Pabrai's book, Dando Investor. So it's a very short book, probably no more than 300 pages, and it just talks about, in very much down-to-earth business analysis, how to think about it. So the example that sometimes comes up when people talk about this book is about the Patel family and the hotel industry in the US. Now, you can just basically see much more than that. He talks about how to really value a business, talks about pieces of stocks and how to really think about the volatility of a share price. What I like about Mohnish's book, and he points out himself in the book and in subsequent interviews, is that he gives examples of when to sell of a stock. Because many value investors, they don't really tell you that. They just kind of say, oh, this is a great buy. But unless you know when to sell. So number 3, again, this is not in really any particular order, but these 5 that I'm going to talk about are really things that if you understand, there is absolutely no way you can do real wealth over time. So it would be Joe Greenblatt. They call it a little green book, but it's not the magic formula. That did not make my cut. Is you can be a stock market genius. This book was written, I suspect, about must have been like 1998 or something thereabouts, I think. But it tells you absolutely everything that you need to know. One critical takeaway for me as an investor was that it talks about the difference between market cap and enterprise value. Now, everyone knows, and I've got a video that I might be able to hook up if I'm smart enough to this, that talks about how you by the company, you are not responsible for paying down the debt. The company pays down the debt with excess free cash flow. Now that's quite complicated for some people if you're new to investing, but it is so important to understand that. When you are a shareholder of the business, you're buying the equity. You're buying the market cap. Over time, the business will pay down its debt. Your equity will rise. Now, you have to be careful. You don't want to be going into a position where the market cap is tiny, the enterprise value is huge because it has so much debt attached to that. Those investments can work. I have had quite a lot of success with that, but you got to be really careful. And it's not something that you want to be getting involved with straight away. But this is one of the biggest takeaways for me in the book. The next book, number 4, is Seth Klarman's Marginal Safety. This is a book that's gone out of print, but I believe that you'll find some ways of getting hold of it, and I believe that you will take so much away from this book. The story that resonates the most with me is when he retells a story of the can of sardines. And it talks about that there's a market somewhere in the United States and they're trading can of sardines, and the people are speculating on the price of sardines, and a rich man finally goes up and buys up these cans of sardines, and he feels triumphant. Opens up the can of sardines, puts it in his mouth, eats it, and basically says, this is disgusting. And the trader says, those sardines are not for eating, they're for trading. Now, the point of the story is that when you are buying into a business, you're buying the company. The price wiggles up and down, but that means absolutely nothing. And this is what Seth Klarman's book, Marginal Safety, teaches us. And I think that, it just talks about the fundamentals of understanding the business sentiment, understanding the investor temperament. I believe that's just so critical. If you don't get the temperament down as an investor, you're going to screw up. And the final book, this would not make many people's cut, but it makes my cut because it was fundamental to me. It's an old book. David Dreman's Contrarian Investing. Now, I believe, if I could get the year wrong here, but the new updated version, I think it might have been 2012 or 13 that it got released. I can't really remember now. Might have been maybe a bit later than that, 14 maybe. But the books, there's 3 or 4 editions of them. I believe that the 1998 one is the best edition of this. I've read the other ones, and that one is just more gutsy. It's raw, and it just teaches you about, again, that critical thing, the temperament of the investor. Because in the 2014-15 one, it basically talks a lot about efficient market hypothesis, and it's kind of ranted a little bit. And for me, I'm not a believer in the efficient market hypothesis. So him going on about it for pages and pages and pages and pages about it, didn't really make a cut for me. Now, the 1998 one, it's just raw, and it tells you basically how it's so true that value investing works so slowly, and then all of a sudden, pop! There's a short squeeze, and you make all your return that you've been waiting for in about 3 or 4 weeks. So you wait for 2 years, and you get the money back only after, it goes through an earnings squeeze, and then in 3 or 4 weeks you make all your money back. So I hope you found that useful, and those are my 5 top books. And if you want to share a few of your books, I'll be really grateful. And as always, please subscribe. I'll see you next time.